In other words, what's up with everyone? Thank you for visiting this page with the latest pricing information about the Terra Luna Classic. And I have found some very crucial data in the charts that I absolutely need to share with you in this video. So stick around because it's going to be incredibly intriguing. This is something you should read through to the end of to ensure that you absorb all of this data. If you enjoy this daily update and find the information to be accurate for Terra Luna Classic, please subscribe to the channel, give it a thumbs up, and enable notifications so that you are constantly in the know. And now, without further ado, we shall enter the graphs. In addition, I'd like to begin with a shorter time frame because I've uncovered some information regarding the Elliott wave count. There, we can see that we experienced an Elliott wave impulse to the downside, as depicted here with A, B, C, 1, 2, 3, 4, and 5. To our eyes, it appears that wave 4 just barely surpasses wave 1. Thus, it's a near approximation. But here we can see an ABC reversal that was previously unseen. Firstly, we'll go over steps A, B, and C, and then go on to step D, another downward Elliott impulse wave move, which is presumably occurring now and could look like this, is what we can expect. This move is likely aiming for the bottom of the current pattern, a standard Elliott wave structure. Then, you can see that our current goal is about 0.27448, which is the bottom of the pattern we're forming. If you're a member of the free Telegram, you've already seen my most recent update on this structure. That's why I'm posting it on the free Telegraph service. Be sure to stop by. I'm broadcasting my signals there, too. It doesn't cost you a dime. We've all made money on the last 3 trades. Incredible in every way. Look into it if you can. Absolutely nothing to lose here. The technical analysis, meanwhile, shall proceed. Thus, I have already informed the membership through Telegram of the sinking, widening wedge. This is a bullish signal, and the price normally moves higher afterward. There are, however, 2 major events that have occurred today. Most importantly for the development of classics in the future is, of course, the 1.2% burn text. Secondly, today and tomorrow our Federal Open Market Committee FOMC meeting days. Accordingly, it is not out of the question that a major sell the news event takes place today. Also, I want to stress this to you all. Don't get greedy if you miss a move today. If you're on the wrong side of a deal, you're going to get wrecked no matter what. So it's best to just sit on the sidelines and hope for the best. Thus, I feel reasonably secure today. I have already cashed in on the winnings from my trades, which I share via the free Telegraph, and am now waiting to see how the market responds to these 2 major developments. After that, I'll take off the Elliott waves from the 1-hour chart because they're not necessary any longer. This has been addressed. Then, we moved on to the little Fibonacci sequence. Here, let me a second to rapidly alter the sample. In this case, we choose matrix, right? That settles it. And there we can see that we have just broken. Nonetheless, it's encouraging to see that we're not far off from reaching falling broadening. The present level of the 786 is 0.27623, which coincides with the bottom of the existing pattern of this declining broadening and must be maintained at all costs lest the trend reverse. That's not good at all. Support awaits us at the following level down, which is right now around 0.26107, which is a crucial sector. Let me back up a bit to show you the source of this. As we can see, this level was crucial as it marked the end of a lengthy accumulation phase that began in early September and ended with a breakout to the upside. The fact that we were able to bake into it and find support there is encouraging, and I believe this level will be able to contain a potential breakout. So, while I'm filming this video, we're getting dangerously close to this support area right here, which we absolutely must hold, and I am hoping I can get it uploaded soon enough to give everyone a proper update. So let's get on to the following topics I want to discuss quickly so I can get this video up on YouTube as soon as possible. A falling bonding, as I indicated before, typically breaks to the upside, though the outlook is bleak at the moment. If we manage to get a swing failure pattern and get back into the pattern, I anticipate a very large rise to the upside, and that move could actually take us to about 0.4 to 4.95, since we don't really have a significant resistance except for this high, which could be somewhat important. This lines up with these rigs, which have solid grounding right now. which is why I would focus at least some of my effort there as well. To be honest, though, I don't see it as a major deal. Right now I'm interested in examining another Fibonacci sequence, the 618, which coincides precisely with this pace. Consequently, the 618 at 0.33497 is a crucial overhead resistance level as well. That's where the first serious pushback will come from. What we're discussing right now is, in my opinion, not all that crucial. The range from 0.4 to 7.37, extending all the way to 4.452, is the next important digit interval. Let me zoom back out to shorter intervals so we can verify that it is currently behaving in a manner consistent with our level. A lot of effort is being put forth to sell, as is evident. Further, as I mentioned before, I expect to see this Elliott wave move unfold immediately, followed by another wave to the downside and then another ABC drop. To conclude, I believe that this ABC wave will carry us to the pattern's apex, where we will then have to await the reaction. Is a reversal in the works, or can we break it to the upside? If we do manage to break above resistance, it will be fantastic news. If, however, we do receive a denial, you guys need to tread carefully. Due to the funk and the burn text, I'm not going to open any more trades at this time. The market's reaction is unknown at this time. Therefore, I tend toward conservatism. When I make a purchase, I prefer to do so in a safe and secure manner. The EMA ribbon is the final segment of this film, so let's go check it out. But the one that piques my attention the most is the one where everyone helps one another out. As can be seen, another large rejection occurred at the very pinnacle of the EMA ribbon, at 0.31296. It's imperative that we overcome this significant barrier. Let's take a look back at the last time we made an attempt to break the EMA ribbons and succeeded a very long time ago. Here, we were turned down. Naturally, our proposal was turned down. So, the EMA ribbons on the 4-hour chart are currently the most crucial place to penetrate. For the time being, the one-day chart shows that we are still within the EMA band. I'm watching for a daily candle close above the EMA ribbon, which would put us above 0.30455. We have to ascend near to the top of that. If the green candle were to close above the EMA ribbon, I would take it as an extremely bullish indicator for the next leg of the market's upward trajectory. There has not been a recent candle close above the EMA ribbon. Therefore, a breakout from this falling broadening might be an extremely bullish and consequential indicator. It indicates a break above the EMA ribbon. You may see that we are not an official partner with them if you click the link. Folks, if you want to trade as I do, presently, they are holding a promotion wherein you may receive up to EUR 9,000 free. And in addition, you will receive a permanent discount of 10% on trading fees. This will help you save a significant